Hello, everyone. Welcome to the officials. Fresh back from China. We have so much data for you, real stuff. You can trust us. And we want to welcome you to our new digs. Look at the office, look at the officials, look at our motto. Without data, you're just another person with an opinion. We give you the data, so it's not opinion, it's a fact. So, ready for the next episode of The Officials with my colleague Ed, Harry, Dr. Wu, and Oliver as well. So, we'll see you from the studio. Welcome back, everyone. Hello, everybody, and welcome to the new edition of The Officials. Please don't forget to click and like us on YouTube or whatever channel you use. But I'm very happy to be here with my colleagues, Dr. Wu, Harry, and Ed. We have a very full program for you today to share with you the latest. Number one, my colleagues here are very faithful to what we are doing, and they remain in situ. While I'm a little bit of the lazy one and I go around the world checking data out, but that is extremely important. So I have been in the Middle East, I have been in China and Singapore. Roughly, China has been the main player that is about 50% of the growth in demand in the last 10, 15 years. So if you don't keep your eye on the ball, which is China, you lose out on what is happening in incremental growth or incremental contraction. And this is what we're talking about here. In China, it's very evident that EVs keep on taking over. So we have observed the markets in Shanghai and Nanjing, and it's ferocious there. Really, way over 50% of the cars on the road in Shanghai, less in Nanjing, maybe a little less in Beijing, which is in the north of the country, but EVs are taking over. And the technology is just moving so fast everywhere. And I also like to highlight the level of competitiveness in the country. I was in a main area square in China where you could see Apple on one side, and I have mentioned this before, and Huawei on the other. And Huawei has so many nice cars, all EV, of course, but they are not the only one. But the main issue is that Chinese demand from the transportation sector in gasoline is getting hit. And this is a one-way street. In our main finding really is that for the user in China, if they go EV rather than combustion, they reduce their expenditure by about 80% on a daily basis. That's huge. So any new car they're going to buy is going to be EV. And this is while the technology keeps on moving ahead. But the product that seems to have been hit the hardest is diesel, where, according to some sources, as much as 600,000 barrels a day have been lost due to the drop in demand from the construction sector. And that is a main consumer of petrochemicals, metals, and diesel, as you need it in the construction. So it's very serious. But we feel that the main narrative hasn't really taken into account that demand is down in China, and we don't see this being reflected or even being discussed very bluntly as it should in reports by the IEA, the EIA, OPEC, Aramco. Everybody just wants to pay dividends and say that China is growing, and we don't know where they're getting the data from, but they're not getting it from reality. So we feel so strongly about the contraction that we took the liberty of sending letters to all these mega international institutions. I recognize that we're this big and they're this big, but we know our data is good. So factor in that loss. And of course, the main thing this week, really the main thing, is Trump. Of course, he won, and he's moving at lightning speed. It's like watching a steamroller, just going down. And he's moving very quickly, nominating all his officials. The world has changed. And we also observe how even in COP, Argentina pulled out. And as we call him in Spanish, el loco Milei, and Trump have a lot in common in what they want to do. They don't trust the state. To be fair, I don't either. I think many of them work or draw a salary without working really. But these are things that are going to unfold very strongly in the next 4 years, really. So in what we're doing here today for you, I wanted to start with our guest, Dr. Wu, and to give us a little bit of a recount how you see China and how you see the data working out.
Yeah, certainly. So, of course, it's all about China. That's what anyone can, that's what all we can focus on in the oil markets. And it's been driving oil demand growth for the past 2 decades, right? Oil consumption. But the main thing about this year is that it has contributed to that much less. I believe it was 70% last year and then only 20% this year. All this means is that China's oil consumption isn't growing as much as people have been expecting. It's more bearish, and therefore that's been a huge bearish contributor to the oil prices, right? Oil sentiments.
Let me interrupt you there for a second. And the numbers I have seen, and there is a little bit of debate, I would say if I shave off the amounts, is 450 contraction in gasoline and 650, 550 to 6 in diesel, for a total amount of 1 million barrels less in the two main products. But in the last month, we're also noticing a little bit of strange things happening in jet. And I cannot figure that one out, if jet is actually making a turn there as well. And in NAFTA, there seems to be a lot of construction of petrochemical plants, so they're going to consume quite a lot. But if we put all of this in, more demand consumption for petrochemicals, jet that has really maybe topped out, 1 million less in the two main products. So maybe the total contraction could be, and I'm really here trying to put all these numbers in, maybe 800,000 down. And that's a lot on a year-to-year basis.
Yeah, that's quite substantial, and especially that's just per day, right? 800,000. Anecdotally, it's not just in the big cities where there's been EV penetration, but also I was in Hainan Island last month in Haikou, and it's very impressive seeing that around 60% of the vehicles on the streets, they're all EVs. If you go on the ride-hailing apps, China's version of Uber, Didi and all of that, it's all been, these are all EVs now, these big SUVs, or, it's just very, quite impressive how fast this has replaced the gasoline vehicles, compared to when I was in Hong Kong or Macau or in Taiwan, where on the roads it's still mostly gasoline-powered vehicles. So it's very interesting to see China's transition to the EV as something that's government-driven, and I believe that's also been heavily subsidized too, because if you want to buy a normal ICE vehicle, and it's not only the cost of the car, but there's a huge competition for these car plates. Whereas for EV, it's much more easy, and that's making the roads much more cleaner.
Yeah. Of course, I was in Singapore, and in Singapore, the penetration is very low. So very different dynamics going on. But in China, really, the transition is already in the past, in the way I feel. But I saw also something very unusual in Abu Dhabi, where my friends, who of course have living houses and have, I believe, more than one vehicle, at least one of them is already EV. And this is in the land of oil, where oil is subsidized and cheap, but they're running at least one car on electricity. And I asked them why, and this is more than one person, and the answer is consistent. Number one, the vehicle is cheap and very nice. And I said, where is it from? I say, Chinese. Number two, to run it is very cheap because electricity is subsidized and is very low. So even though fuel and electricity are subsidized, still electricity wins. So in the line of oil, EVs are taking over. Amazing, really. So anyway, we are going to now move, if you don't mind, to Harry or Harinder to talk about what OPEC is doing with their cuts, because kind of they're between a rock and a hard place. But if you could add a little bit to that.
Sure, yeah, absolutely, Jorge. So, of course, December's a time when OPEC were considering unwinding some of their production, and that's going to obviously be in combination with Trump's policies and Trump's decisions in terms of potentially bringing higher amounts of shale back online. There's obviously going to be a balancing point that OPEC will have to find between bringing barrels back, but also holding them back potentially because of shale production, keep the price elevated. I think, Ed, you've also kind of expanded a little bit on OPEC in some of the research and the officials.
Yeah. Well, in a way, it links back to what you've been saying about the Chinese gasoline demand and diesel demand coming down significantly. In that OPEC is still forecasting, I think, 450,000 barrels per day of growth in China this year in total crude demand. So we think their numbers are a little bit off, let's just say diplomatically. So I think in their demand and supply growth forecast for this year, they've still got around a 600,000 barrel preference towards or favorability towards demand growth. So that's giving a little bit of space for them to potentially return a few barrels, but their numbers seem a bit dodgy, really.
Yeah, and it's hard to understand the level of investment unless you have been there. What is required to produce 1 million barrels a day? It's billions and billions and billions that you need to invest in drilling, in laying pipes, in having personnel to have that capacity. And then if an order comes from the top that says shut in, it's essentially you're losing money because all that investment is generating zero, right? All that capex that you spend, it's really tens of billions to do that, is generating zero. And then you want to generate the oil, you want to produce it to get a return. But if you want to keep the price high, you don't produce it, and then somebody else does. And little by little, your room to maneuver becomes smaller and smaller. You're really painted into a corner. So in the past few days, there has been even some stories that if oil comes back from OPEC that has been kept back from the market, we could see prices down to 40. We said that a few months ago that could happen. And of course, it hasn't happened. Saudi Arabia is still holding it back. Of course, in case you forget, Abu Dhabi, of course, is putting the oil.
Kazakhstan's another one. They still haven't met their compensatory quota to compensate for overproduction.
So if you read the publication, the officials, yesterday we drew a very nice cartoon for you, which was a dumpster fire. OPEC is a dumpster fire, right? Where Abu Dhabi is pouring in gasoline into it, Kazakhstan and various others. So we're going to keep on updating the OPEC dumpster fire cartoon to show you who's pouring the oil in. But before anything, back to politics. Which I think is in everybody's mind right now.
Of course. Exactly, Jorge. Yeah, so recently we found out some of the nominations to the cabinet that President-elect Trump has made. We've seen Matt Gaetz to the Attorney General, Marco Rubio to Secretary of State, which was, fairly expected. But one I wanted to focus a little bit on is the ambassador to Israel, Mike Huckabee, who's a staunch Zionist. He's historically rejected the two-state solution in Palestine, likely going to boost Netanyahu's confidence of US support. It's certainly going to make Iran a little bit nervous. Iran's already kind of holding back in terms of a potential retaliatory attack, waiting for Trump's policies and negotiation there. I think also the decision on the US trade representative will be quite an important one. Germany as well, tense political situation. We've got a weak economy there. Chancellor Olaf Scholz recently got rid of the finance minister Lindner over kind of like the best way to mitigate and kind of tackle the weak economy. So the way Trump trade representative, who could be, someone like Robert Lighthizer, who was the previous trade representative in Trump's term, very, pro-tariff, as quite hardline on China, and also could potentially be the same with Europe and have effects there. So some of the stats that I read were that some German economic institute from Cologne was calculating that 10% tariffs on both sides could cost the German economy 127 billion euros and potentially knock a percentage point off economic output in 2025. So really, really massive effects that Trump tariffs could have to Europe, but also, we talk about China a lot, but European effects can't be understated.
Can I just say as well that the spate of forecasts that we've got this week, the IEA, the OPEC, and the EIA's forecasts, they've all been made on the assumption that tariffs won't happen because they can't speculate yet that they're going to happen before they know the extent, who they're going to affect, etc. So if they do come into effect and they decrease global growth, then that's going to hurt global demand growth even more.
Yeah, and this is the reason why we're still looking at a number that will start with a 6. Because with Lighthizer in that position and with just Trump's empathy for tariffs, you cannot say that he's not going to put one single tariff on. He will put some on. And that will lead to deglobalisation and some inefficiencies in the system. At the same time, the guy, if I may call him that, he knows that this increases inflation. So the only thing he can do then is to have a cheaper oil to counterbalance. So no matter which way I analyze it from, there will be either a lower price in oil because he's pushing it, or there will be less consumption because the world is becoming deglobalized, and therefore you will have a lower price. And Dr. Wu, in China, what did you feel? What is the sense there that they're isolationists, like the U.S. turning in, or do they talk a lot about the U.S.? What did you see?
Yeah, so it's more to the point that there will be some deglobalization, more decoupling. It does seem that China's policymakers at central government are aware of this, and they have been, of course, planning ahead, because Trump initially had implemented tariffs to China in 2018, and then during the Biden administration, those tariffs were not removed. Instead, there were some new ones added up. For example, semiconductor export restrictions onto like the solar panels, batteries, so on and so forth. And of course, it's expected that Trump would escalate that. At least from what I've anecdotally seen on social media, maybe it's just the algorithm, but it seems that the people have been more lukewarm to Trump than a Harris administration, because at least Trump is very honest about his dealings. He's more of a businessman. And from a China hawk perspective, similar to how only Nixon could have gone to China in the 1970s, only the Trump administration can deal with China from here on out, because Biden would be seen as soft on China. But if the Trump's administration, if they make deals with Xi Jinping, then it seems to be more, it's more acceptable, so to speak.
Okay, I wanted to end with one observation I did in China. The interest in learning English is not there. They don't care. They have turned isolationists. They see the world splitting in two, so is why bother with English? The other is just to wrap it up and tell you where we see things going. So from 1 week to the next, gold is no longer a thing to be into. It's like, who cares about gold? Now it's about being long the dollar. And if you are long the dollar, you also should be long American stocks, it seems. Whether it's small cap, little cap, or big cap, be long the American stock market. And if you have anything that is related to Mr. Musk, I think you'll make some money. And he's also very serious about cutting off a lot of heads in the administration, in the federal government. And these things, if they're successful, will of course make the American economy more efficient and will make the stock market go even higher. So with that positive note to everybody, thank you very much. And the oil price is about $73 with a tendency for meatballs to rain on it. Okay, see you next week. Take care.